Hello everyone, welcome back to our channel PUSAS Academy. In the series of Accounting Standard, today I will start Indian Accounting Standard 1, that is Presentation of Financial Statements. Indian Accounting Standard 1 is the presentation of financial statement. So while presenting the financial statement, we have to keep some points in our mind. The first point is true and fair presentation and compliance with the Indian Accounting Standard. The second point is going concern. Next is accrual basis of accounting. Then presentation consistency. It means presentation and classification from one period to the next should be retained. Next is the materiality and aggregation, which means an entity shall present separately each material class of similar items and items of dissimilar nature. Next point is offsetting of assets and liabilities or income and expenses is not permitted. And the last point is comparative information, at least 1 year should be presented in the financial statement. Move to the next slide, that is components of financial statements. So the components of financial statements are a balance sheet at the end of the period, statement of profit and loss for the period, statement of changes in equity for the period, next statement of cash flows for the period, notes comprising a summary of significant accounting policies, then comparative information in respect of the preceding period, and a balance sheet as at the beginning of the preceding period when an entity applies an accounting policy retrospectively or makes a retrospective restatement of items in its financial statements. The first component is the balance sheet. So the items in the balance sheet are of two types. The first one is current items and second one is the non-current items. So current and non-current items both should be shown separately in the balance sheet. Next is the item should be presented in order of liquidity. A balance sheet mainly comprises of assets and liabilities. So the current assets are expected to be realized within 1 year. And the current assets are generally used for trading. And the examples of current assets are cash and cash equivalent. And the current liabilities are due for the payment within 1 year, and they are incurred primarily for trading. And the examples of current liabilities are creditors for the year. Next component is the statement of profit and loss. So this statement mainly comprises two sections. The first section is profit or loss section and the other is comprehensive income section. So the profit or loss section is mainly presented first and followed by other comprehensive income section. Items within other comprehensive income are required to be categorized into two categories. The first one is that could subsequently be reclassified to profit or loss, and the other category is that cannot be reclassified to profit or loss. Next component is a statement of cash flows. So it provides users of financial statements with cash flow informations. And this statement of cash flows will be covered in detail in Ind As 7. That is the statement of cash flows. So next is the statement of changes in equity. So the information which should be presented in the statement of changes in equity are the effects of retrospective applications, restatement which is recognized in accordance with Indian Accounting Standard 8, that is related to accounting policies, changes in accounting estimates and errors. And the next information is reconciliation between the carrying amount at the beginning and end of the period, and the dividends recognized as distributions to owners during this period. Next is the identification of the financial statement. So the financial statement must identify the names of the reporting entity, whether the financial statements cover the individual entity or a group of entities, the date and the period covered by the financial statements. Next is the currency used and rounding used. Next is the reporting period. So the accounts should be presented at least annually or for 1 year at least, but any if longer or shorter the period, then the entity must disclose that fact. Move to the next, that is third balance sheet. So an entity shall present a third balance sheet at the beginning of the preceding period. In addition to the minimum comparative financial statements, if it applies an accounting policy retrospectively, and the retrospective application, retrospective restatement, or the reclassification has a material effect on the information in the balance sheet at the beginning of the preceding period. So this is all about the Indian accounting standard first. So thank you so much to all.